Welcome to the third in our series of our Global Growth webinars, kindly sponsored by WorldFirst. To date, we've looked at how scale-up digital tech brands can access and grow into North America and China. Today, we want to dig deeper into what it takes for an ambitious company to grow globally in this new disruptive post-COVID world. And who better to ask this than to Jonathan Quin, who in 2004 left his high-flying city job to found WorldFirst in a South London basement with a dream of making it easier, faster, safer and cheaper for people and businesses to trade internationally. 15 years later, and with a business of over 550 staff spanning 8 global offices, which serves more than 250,000 businesses and individuals, WorldFirst was acquired by Ant Group in February 2019. Announcing the purchase, Jonathan said to the Financial Times that WorldFirst products combined with Ant Group's technology and client networks will advance our shared aims of building the best global platform for international trade. We'll also be talking to Jeff Parker, who has taken Jonathan's mantle as CEO of WorldFirst, as to the future of smart transactions on the global stage and how that relates to Jonathan's new role at Ant Group. There'll be opportunities after my chat with Jonathan and Jeff to bring in some partners and clients and prospects into the conversation. So please do ask some questions on chat about what you need to know in order to roadmap your online growth internationally over the next few years. Before I start, I think it's probably important just to put some context and color into what's happening globally at the moment. Because over the last 5 years, the way international trade has changed is quite phenomenal. Right now, digital, agile, disruptive, borderless transactions now means that goods and services can be ordered, shipped, delivered instantaneously or in a matter of days to or from any part of the world. For many fast-growing scale-up and mid-sized businesses, this is both a huge opportunity and a problem. On one hand, new and lucrative and expansive international markets are opening up all the time, and entrepreneurs are able to sell and develop their products and services into those markets to a point. But if you're in the scale-up space, you may not have the in-house resources to capitalize and support that growth cohesively. You may lack some market research information, some sales support, compliance, tax, talent, funding, grants, incentives, business networks within the geographical regions that you're looking to go to market in. And all that was pre-COVID. Post-COVID, the same elements are supercharged as the old analog world of cash transactions, bricks and mortar, conventional travel, large entertainment and conventional gatherings and fossil fuels are becoming more and more obsolete. Also, if we look at our audience today, the registration data shows a huge number of you guys trading in different currencies, which is both a risk and an opportunity. So if all this resonates with you, GTM Global provides an information hub for scale-ups to go to market globally. We provide resonant signposts for the way ahead. And speaking of those signposts, there are no better qualified people than Jonathan and Jeff, who between them have over 40 years worth of knowledge to share, to give you advice and pointers for your future global growth. So on that note, I'd love to, if I can, bring in Jonathan to the conversation. And Jonathan, are you there?
I am, yes. Thank you for that very generous introduction. And welcome to everybody.
Welcome. That's great. It's great to see you today. Can we start, if it's okay, Jonathan, but looking back at your back pages, could you talk us through how you launched and grew WorldFirst in that dark London basement? There must have been a clear vision, a focus from day one on international trade. And I also know when we've spoken earlier, how important getting the right talent has been for you.
Sure. Well, going into the further recesses of the back pages. So I guess when I was at school, I set up my first business and I made, I think, more in the first week than I'd made in about 10 months of delivering newspapers prior to that. So that was kind of a catalyst or kind of convinced me that I wanted to do business. At that point, it was a bit less common to go straight into set up a business from scratch. So went to university and then I went into the city and worked for 2 banks. And I did work in foreign exchange. So setting up a foreign exchange business wasn't quite as bold as it might have seemed. And actually that was quite a good learning. But I think that the most important thing I learned there was that we were looking after massive companies that had multiple banks and were getting very good rates and service. And I had friends working for smaller businesses, or you know, I would talk to people, or I had friends whose parents were buying properties abroad, and they were getting terrible rates and service. So we had from quite early on, and I worked with Nick, who was my co-founder. We could just see there was this kind of big gap between what the big companies were getting and what the small companies were getting. And around that time, with the arrival of kind of streaming rates and not needing to be part of the kind of interbank market, there was an opportunity to offer a service that we got from the banks at a lower margin to smaller companies. So it was about taking the product, service, and pricing that the big companies were getting and providing that out to smaller companies. I did consider a couple other businesses at that point, but I just kept coming back to this because I think I fundamentally believed in globalization, in people starting to be more willing to deal outside their main banks. So I think if you went back 20 years, most people thought, well, I need a mortgage, I'll go to my bank, or I need a loan, I'll go to my bank. And actually people were starting to sort of disintermediate those services and offer them, you know, some other companies were coming in to offer those. So I think we fundamentally believe there's an opportunity. And then there was this margin gap that we knew we could offer better price and still make something on that transaction. So we set up, as you say, so I kind of fundamentally like start small, think big, move fast. So while some businesses now raise a lot of money before they start, and that to me is higher risk and more stressful. Sometimes you have to do that because of the capital costs of starting, but we started very small. So built our own website. We were operating from this tiny office. And you know, we were trying to portray at the time that we were bigger than we were, but we provided a good service. We hired nice people, trustworthy people, and again, I think it's so important that customers want to buy from people that they like and they want to talk to. So people buy from people. So we hired nice people. So we had this motto that we would hire people that were nice, friendly, bright, professional, and proactive. And we decided that we could find foreign exchange is not that complicated. So we thought, well, we'll hire nice, friendly, smart people and teach them foreign exchange, which you can do in a few days, as opposed to hiring city traders and trying to teach them to be nice, which is considerably harder. So that, and also much cheaper. So we weren't building in big margin costs, so we could offer this better price. I think to your point about people, I mean, it's a cliche, but it's a cliche because it's true that your business will live or die on the quality of the people you have. You know, if I said to any business, if you had 100 brilliant people, your probability of success is just massively higher than if you had 100 people that are not great or not very motivated or not passionate or not knowledgeable. So I think being able to try and identify that talent and bring that in, and even from the very beginning that was the case. And obviously you make mistakes and you learn from those, but yeah, that was key to our success, I think, hiring the right people.
And obviously you've how that must have played well, or it must have helped you survive and grow through the 2008 recession, because obviously having great people in place and with a sort of disruptive view. Can you tell us a little bit more how you dealt with that? Because that, in a sense, for many of the people on the call now, they're looking at what's happened now with the COVID recession, and you clearly survived and grew through the 2008 one.
Yeah, so we were pretty lucky. I think we thought our business was only affected about 10% through 2008 and 2009. And I think we were in that fortunate position of we were growing at such a rate that even a 10 or 20% dip, we still grew through those years. I think the other thing was I think having come from a banking background, we understood banks, their risk concerns, their compliance concerns, and we were always super strict on compliance and careful, and you know, we kept them in the loop and things. We were transparent, and because we were profitable, they weren't worried about us kind of failing. So I think also, so some of our competitors lost their banking relationships in 2008 to 2009 as the banks tightened up their risk parameters, and we fortunately didn't. So I think that helped as well. But I think also what happened in 2008 was that there was a wholesale reduction in people's trust in their banks. You know, there was daily stories about banks not looking after customers properly, and that was true. I'd seen that at the banks that I worked at as well, and so actually that worked in our favor, that it drove people to look for an alternative, and we repositioned ourselves at that point. We rebranded, and it was all about the people in the business and trust, because we knew that that's what people were looking for.
And obviously at some point you were obviously still in London, But you went on your international expansion journey to first Australia and then into Asia.
Yeah.
What made you
Yeah.
move overseas? What was the kind of the driving force behind that first foray
Yeah.
after these shores?
Well, I think one of the advantages of working in foreign exchange is you're always dealing in international markets. And having worked at somewhere like Citibank, which had built its business on globalization, I think I was already converted to the belief in the value of providing multiple markets. Plus, we built an online system for us to set up in another country, which actually wasn't hugely difficult. Sometimes there were regulatory hurdles, but not always. And I'll be really honest, the reason why we went to Australia is because my co-founder wanted to spend a couple of years abroad, and it was either America, Australia, and he went to Sydney and decided it would be more fun to live in Sydney. So that was the very strategic decisioning behind Sydney. But I mean, he had also validated that it was a good market because, again, the bank margins were high, lots of SMEs, lots of exporters. The Australian market is a very international market. And just a few statistics, there's over 7 billion people in the world and there's about 70 million in the UK. So if you're only dealing with the UK, you're only dealing with 1% of the world or your addressable market. And I think it's easy in the UK. I meet people and they think that there's billions of people that are not their target market. And there are, but actually if you look at the percentage of that 7 billion that are in developed markets, which are, depending on what your product is, potential customers, I think it's bigger than most people realize. And I think once you do one and you're like, oh, that actually wasn't that difficult, then it's quite easy to see how you replicate that model in other countries.
And obviously then from Australia, the connection into Asia and connecting into Ant Group and joining the Alibaba ecosystem in 2019. How did all that come about? Was that through the Australian connection, or was that just?
So after Australia, we did the US because we also thought that was a good market, and it was, but it was that is a good example of one that was tougher for us. Like, I don't think we got the US quite right. Like, we did it, and we built a reasonable business there, but I don't think we got it. I don't think we got some of the decisions early on quite right. And then a friend of mine ran a sourcing business, Matrix, from China, and I was in a forum with him, which, by the way, is something I strongly recommend to any businesses. So I was in a forum of 7 people that ran their own businesses. We used to meet up once a month and share ideas, leads, needs, talk about challenges. How do you create a sales team? How do you, and one of the topics that came up a lot was how do you expand internationally? And so he said, you guys need to come to China, because we were all pretty naive about that. He organized the trip and we went to Hong Kong and then China. And I think my eyes were opened to just the size of the scale, the opportunity, the rate at which it was accelerating out of, a kind of agricultural economy 30 years ago. In 2004, the UK exported more than China does. And now China exports 4 times as much as the UK does, just that pace of change. And also there was fundamental challenges to foreign exchange within China because of the controls. And we thought, and we worked out a way to still help Chinese customers. I also, when I was in China in 2012, met Amazon in Beijing, and they quite recently set up, and they had decided to go upstream. So as opposed to just dealing with distributors, they were starting to go to Chinese merchants and say, why don't you sell direct to these platforms? But then Amazon in America said, well, you can only sell if you've got a local bank account. So we worked out how to build this local bank network to collect money from these merchants around the world. And that was the basis of our e-commerce business, which then was the fastest growing bit of our business and remains to this day the largest part of the business for us.
So how did that then translate into the Alibaba ecosystem? Was that, did that follow as developing that e-commerce platform for payments? Was that a sort of a seamless journey, or was that?
No, it was a journey, but it wasn't seamless. I wrote to Jack Ma in October 2006. Still got a copy of the letter I sent when I'd first heard about them, and I wrote and said, because we already had some customers coming to us saying, I'm trying to send some money to an Alibaba seller, and it was a hassle. And I wrote and said, why don't we be a kind of UK and Europe agent for you, and we'll help your buyers get money to your sellers. So I was always kind of aware of them and the very impressive kind of growth curve they were already on, and the kind of visionary that he is. And so we had various meetings with them, probably met somebody from Alibaba every couple of years for about 10 years. And then as our business was growing in China, so I personally think China is one of the biggest opportunities. It is also one of the hardest markets to create. It's not easy, but if you get it right, it's a rich seam of potential business. So in about 2017, we were starting to think that we wanted to take on a Chinese shareholder, because I think it's very helpful if you're going to sell in China to someone on the ground who can tell you how does it really work, who do you really need to know, how do you hire people, because it's very difficult, I think, in the West to understand just what does this university mean, what does this background mean, what does this experience mean, can I trust this person? And so we decided we were going to take on a Chinese shareholder, and we were originally looking for a minority shareholder. And then through one of those meetings, I met up with someone from Alipay and also someone from Alibaba. So I actually then sent them, so I had a little film made and put it onto an iPad and put it in this nice wooden box and had it delivered to Alibaba. And it was about how we thought we could work with them. And it was one of those things that probably cost £400, which is sort of quite a lot, but actually relative to what it might cost me for a salesperson for a week or something, it was probably quite cheap. Anyway, so we then got talking to them, and it became quite clear that we had a very similar vision, that we were trying to build this platform for international trade, which I think Jeff's going to talk more about, but we were trying to build something to help all of these buyers and sellers around the world trade more easily, because payments, in my opinion, is still a bit broken for lots of people. We still have customers in America who have to drive to their bank to make a payment, and it can take longer sometimes than the goods do. So and so we had this vision that it was that you could make that better, and I think that accords with their vision as well.
So that, of course, leads very nicely into your new role, leading the strategy of Ant Group in Europe. Can you tell me then how you built upon what you did with WorldFirst and Alibaba, and where that's going in terms of the support and the vision of making it easier for UK, EU companies to do business globally?
Yeah, I probably should say at this point that there is to some extent a divide between Alibaba and Alipay. They work closely together, but I think on the Alibaba side, Alibaba was originally mainly Chinese exporters selling to Western importers. I think that there's increasingly a move by Alibaba to also have, for example, they're doing some work in Italy at the moment to have Italian exporters. There's obviously big fabric and clothing businesses there. And so I think they're trying to make sure that that's probably their kind of diversification. And so they're looking to take on exporters. And then also, I think they feel that sometimes it's still a little bit inaccessible, or it's not wholly localized in all markets around the world. So they're looking to try and localize in these markets. I think on the Alipay side, Alipay has actually been in Europe since 2012, but it was mainly focused on Chinese tourists coming to the West and wanting to use Alipay in merchants and Harrods and shops like that. So, but China, when you look out, Europe and UK, it's still it's an absolutely key market. And so I guess it started by looking at the markets around the world. Where are there opportunities? So Alibaba has 1 billion customers, which is just mind-boggling. What's as mind-boggling as they're trying to get to 2 billion customers. And you can only acquire that number of customers in very few segments. So there's lots of businesses for which sectors you just can't get to that kind of skill. But one of the things is around sort of payments and so on, there are clearly kind of opportunities. So I think that they're trying to very strategically work out where there's opportunities to offer what they've built, and they've built some amazing technology, and to see where else that might have applicability. I should say it's very early days, like there's no imminent announcements coming on anything like that. We're just starting to work out what are the opportunities here in Europe.
But I mean, there's clearly huge opportunities for growth, but it is, as you say, it's early days, but there's some great vision ahead. I'd like to, though, which links into this, Jonathan, because I also know you're an investor. You've got a long track record of investment, either through the business, yourself, or through the group. And what I was interested in, because we've got lots of companies who've come on this call they've obviously got ambitions to grow in the way that you have. And I was just wondering what you look for when a company is looking to expand globally. What are the ingredients? And we've mentioned talent, obviously, but can you give us a sense of what are the ingredients that you look for as an investor in a company that is growing and you would contemplate supporting?
Yes, so it's hard to give a short answer to that because I could probably
Yeah.
talk for an hour on that. Um, well, fundamentally, you're looking for something unique because, but not necessarily. I'm not always looking for a bleeding edge technology solution because actually sometimes you then bleed and it's very difficult to get there because you're trying to target a new segment. But most businesses don't have monopolies. They do things better than their competitors. And if you can, across all of the parts of your business, in your sales and your marketing and your operations and your delivery and your brand and all these things, if you can just do each of those about 10 or 20% better, that compounds into you being fundamentally better than your competitors. And if you can grow, we used to try and grow at 38% per year. If you can grow 38% faster than your competitors, and after 5 years, you're 5 times the size. So compounding is your friend in this. So I guess, so I'm looking for businesses that I think have a fundamentally good idea, have some reason why they're going to be able to do it better than the competition. Have they got the brand better? Have they got the distribution better? Does it look nicer? What is it that they're going to do better? And then it's all about the people. Like, do you think the person has that real drive and ambition and capability and resilience, IQ, EQ, self-learning, that you're looking for these sort of traits of I want to drive this business and I'm going to do it well and I'm going to bring people with me and hire a great team. So it's a sort of combination of skill sets and mindsets amongst the people that are running it.
Because one of the things that you always notice is that a business runs through different phases. That when it's first founded, as it grows into different stages, the skill sets at the top change, don't they?
Yeah.
Is that part of that incremental piece too?
Yeah, absolutely. I think that's one of the things that Reid Hoffman's talked about. It's very unusual to get people that are good at 0 to 20 people, 20 to 100, 100 to 500, and 500, 2,000 and beyond. You do get some people that can do that, but usually at 1 to 20 people, you're doing multiple roles. At 500,000, you're going to be more focused. So actually, there are fundamental differences in the skill sets you're looking for. So it's unusual. And if I look back, by the way, that's one of the things that I think I got wrong. There was times where I was too emotional about some of the people because maybe they've been with us for a while, and I didn't want to have a difficult conversation with them when actually that they were maybe not the right person for that going forward. And that's really difficult. But actually, it's not, as you all know, it becomes better for everybody sometimes to do that. And so you think that you're being kind to the person, but actually, if that means that they're not doing as well, and you're starting to give them less good reviews because it's not fitting, it is better to help for everybody to do that. So I think you do have to keep reviewing that, and I think it's one of the things that in the past I haven't spent as much time on as I should have. Really, as the CEO, you've got so much of your role should be about putting the right people in the right seats with the right roles and with the right structure. Actually, that's one of the things Alipay is very good at. They keep reviewing who they've got doing things and whether it's the right structure. And so many businesses, if I said, show me your management team and give them scores out of 10. If you've got anybody in there who's under about a 7, they shouldn't be there. And if you say to someone, imagine I took that person out and gave you someone that you gave a 9 to, how much would that transform your business? Massively. Why are you not doing it in too short a time? So they're probably too in the weeds and doing too much kind of day-to-day stuff to focus on that. And it is make or break.
It's interesting to come full circle because we've come back to talent, haven't we? And how best is talent managed? And there are different stages of talent and the nurture and process behind it. That's great. Well, look, if it's okay, Jonathan, I'm going to now bring in Jeff to sort of broaden the canvas a little bit more. And so, Jeff, welcome from Hong Kong. It's great to see you there.
Sorry, I was on mute. Yeah, welcome, Mark. Thanks very much for inviting me.
Oh, it's a great pleasure. And obviously, we've been talking about Jonathan's background in investment, and that's been a big part in your past life before WorldFirst, with your involvement working in investment banking and international payments. Can you give us a bit of a background on your back pages too?
Sure. Like Jonathan, I started my kind of career in investment banking in London. Initially with JP Morgan and Morgan Stanley. I then kind of jetted off to the US and spent a year in New York, and then kind of moved out of banking. Actually, I kind of decided that it wasn't for me, and I moved into consulting spent about 3 years with Accenture, primarily kind of doing strategy consulting. And then during that time, jetted off to Sydney in Australia as well, and spent about 12 years in Australia. And during that time, I actually then did a full circle and went back into investment banking, worked for a company called Macquarie, and really doing mergers and acquisitions for them. So I spent a lot of time buying assets to go onto Macquarie's balance sheet, primarily around the financial services space, but sometimes a bit broader. And one of the assets that we bought at Macquarie or invested in was an international payments business. So at the time it was called OzForex, a small business with about 30 people, and very similar kind of vision and dream as to what Jonathan alluded to, and say similar market characteristics in Australia. So I was on the kind of the investment side for a while, and then got invited to go and join the leadership team at OzForex. So I joined there as the chief operating officer, and we grew that from about 35 people to just over 300, and then listed that on the Australian Stock Exchange back in 2013, 2014. And then post that, the payment space was relatively small at that time, and fintech as an industry didn't really exist. So I was constantly kind of bumping into Jonathan at trade shows and things. And over kind of a course of a year or two, we got talking, and I managed to persuade him to get me across to WorldFirst. So I moved to Hong Kong in 2017, initially as kind of running the Asia Pacific business, and then obviously over the last 3 years, it's been quite a journey, and kind of moved and done a few different roles, but I guess culminated in taking over from Jonathan as a CEO about 2 months ago. So great journey, and as you mentioned, we kind of got acquired by Ant Group in that time as well.
So now you're at the helm at WorldFirst. Can you give us your vision and mantra as to how WorldFirst is nurturing and supporting scale-ups in seamless and innovative cross-border trade? Because obviously that's the great opportunity moving forward, isn't it?
Yeah, I think you're right. I mean, I think we still very much have that ethos that Jonathan talked about. We were aiming, and we set the business up to help SMEs and individuals transfer money faster, safer, easier, and cheaper than the banks. And we continue to have that really at the core of everything we do. Now, if you think about really international trade and what drives international trade, there's really, I guess, three simple components. There's a buyer and a seller at the start of every transaction that have to kind of connect and make that kind of purchase. Once that has been agreed, then the goods have to be shipped and delivered, and then the third part of that is how do you make that the payment. And I think if you look over the past 15 years, there's been huge kind of progress in both the first of those two. So in terms of buyers connecting sellers overseas, there's been a plethora of third-party marketplaces like Amazon and eBay and Alibaba that have kind of come to the surface to actually make that connection quite easy, and significantly easier than it ever was before. And then from the delivery perspective, again, huge progress. Shipping costs have come down about 20% in the last 10 years. And then with things like Amazon Prime and other logistics services, you mentioned earlier, Mark, that you can now get products delivered same day, next day. Pretty transformation in terms of what that experience looks like for a customer. But the payment piece is still very problematic, and we see that as broken. And it's 80%, 90% of this market is still dominated by the banks, and it's broken. It's slow, it's expensive, it's complex. It's kind of opaque, and we as a business think there's a huge opportunity to solve some of those problems. So simply we want to solve that payments process and really give SMEs, small businesses, kind of a turnkey solution that allows them to access some of those products and services that large corporates get access to. And we want to give the ability to our clients to focus on what they do best, which is running their business. And so if we can take the pain points away from the payments part, then we think we're helping them, run their business.
Sorry, Carol.
I was just going to say, just to give a kind of a context of the core product, I guess, is, as a small business, you can sign up with us today, and we can give you a suite of, I guess, bank accounts around the world. And the key to that is that those accounts are locally domiciled in country. So an Australian dollar account in Australia, a US dollar account in the US, and I'm sure those on the call recognise that having access to those local accounts and being able to collect and pay funds locally has a huge benefit and takes a lot of pain out of that process. But it's quite difficult to do as an SME to open a bank account overseas. So that's really kind of the core of what we're doing. And longer term, we want to go beyond payments and really go from being just a payment provider to really a financial services provider, because there's a whole bunch of adjacent products and services which SMEs need to do cross-border trade, and often it's what stops them growing overseas is access to logistics, or understanding what the tax implications are. And so I think what as a business we're trying to do is to solve some of those pain points and just make it easy for them to go and trade overseas themselves.
Yeah, because I mean, it's interesting because Jonathan talked about how global payments has been fragmented, and effectively you're looking to provide some sort of cohesive whole through Ant Group and through working with Alibaba. It's that you're providing some sort of global cohesion, really, aren't you, for ambitious global businesses?
Exactly. I mean, if I think about kind of what our plan and our strategy is, we're really trying to take a fragmented process, and actually as a business we historically created products that served either importers or exporters, and actually what we're seeing of late is that the needs of those customers are actually combining together, and so actually you can't think about them independently anymore. So we have to think about our importers are often exporters, and our online sellers are sometimes offline sellers. So we need to bring that together into one kind of single, easy to use, multifunctional kind of platform, and then leverage. We're in a very unique position, I think, following the acquisition, that we can actually provide truly unique services to our customers by connecting kind of the non-Alibaba ecosystem with the Alibaba ecosystem, which is what gets me really excited.
No, I can see that. And what I'd like to do is obviously bring Jonathan back into this. And let's, before we open to the wider audience, and please do send in some text questions to Jonathan and Jeff. But I'd like to just ask both of you, if I can, can you give us a sense about the challenges and opportunities, given this fragmented world, that you see and you're looking to span bridges on? What can you see are the challenges and opportunities for ambitious companies to grow? Where are the pain and the gain points?
Well, I think it does vary by what you do. I think fundamentally expanding globally is difficult, but I think it's worth it. If you ask somebody why haven't you expanded into a particular market, it's usually risk, cost, or inertia. So it's and usually it's fear or inertia. So I think you have to say, how am I going to de-risk that? And again, I think starting small is one of the things. So I think you have to. Everybody's busy, so you have to carve out time that you're going to dedicate, or hire a dedicated person to look at going internationally. I think this is obviously difficult at the moment, but you do have to go in person. You have to go and get a feel for the market. Sometimes we went to places and met people and realized there wasn't an opportunity. Sometimes we went and realized there was. So I don't think you can do it all remotely. I think you have to do a mixture of kind of qualitative and quantitative analysis. So you have to go and check there is a market, and we've done some really basic things like what's the population and what's the wealth of the population and what's the international nature of the population to work out whether it suits us. So I think you have to do some of that, and then some of the go and check that you feel like there's an opportunity and talk to people there. I think sometimes people try to get to be 100% sure of a market before they go into it, and I think that's almost impossible. I think you never go, because there's always some risk. So I've always liked the 70% approach. If you're 70% sure, you should do it. And so if you are under 70%, if you're at 50%, what is it that's holding you back? And maybe that's the trick. Maybe that's talking to suppliers. Maybe it's talking to a potential member of staff. Because if you suddenly find somebody that you think could run it for you in that country, does that get you to 70%? What is it that's going to get you over the line? And if you get over 70%, you've got to do it. And if you're not, if you've tried all these things and you still can't get there, then you probably shouldn't do it. So you need to have some sort of measure of how you're going to get going. And I think, inertia is difficult, but I think once you've done it once, it gives you confidence to do it again. And then there's the external resources. So sometimes when we went to the DIT, as it's now called, it was different then. They weren't very helpful, and in some countries they were super helpful. Sometimes there's local trade associations, business, ways. I'm a member of something called YPO, which gives you a great kind of global network to get people to help you on the ground, because you do need help when you start, and you need help to identify talent or try and find people. So I think work out what you're trying to work out, what market strategically, work out how you're going to find somebody how you're going to run it, how you're going to justify the cost of it, and how you're going to kind of overcome the wall to get started.
That's really interesting, because certainly when we talk to companies, we always say the first thing is, can you define what your route to market is? What is your, because that then jiggers everything else around it, doesn't it? You know, if you can, you know, are you looking to go somewhere virtually, are you looking to boots on the ground? Jeff, what's your sense about routes to market and what people should or shouldn't do?
Yeah, I mean, I think to reiterate what you and Jonathan said, I think going international, you know, just presents huge opportunities for everyone. The market is so big outside of the UK, so it's obviously an attractive proposition. I think product market fit is extremely important. I think for me, you know, we talked about talent. It's all about the people. So it doesn't matter what the idea is. It doesn't matter, you know, if you've got the right route to market. If you don't have the right people, I think it's difficult to be successful. I think it's also really important to be very clear in terms of, you know, what is your purpose, what are you trying to achieve, what's your mission, and why are you trying to achieve that? Because again, I think there's so many opportunities out there that's often sometimes the blocker is that you're trying to do too much, and so being very focused on what you can achieve, I think, or what you're trying to achieve is really important. And then I think the other piece which people kind of sometimes forget is that you're probably going to get it wrong the first time, so you need to be agile and embrace change. And you know, there's lots of moving parts in this, and so if you're very rigid in terms of your thinking, then I think that can present problems. And I was, you know, talking about Reid Hoffman, Jonathan was talking about, I was reading about PayPal the other day. I mean, they changed their business model completely 3 times in the first 12 months of them being live before they actually found a product that enabled them to fit. I think in the current post-COVID world, I think one of the keys around that route to market as well is around digital and online. I think we've seen a significant increase in digitalization and switch to online. All companies, I think, now are kind of need to be tech and digital in some form or other. So if you're not a tech or an online focused business, I think, you know, me personally would be making sure that I'm focused on how do I create my business to be more digital, because I think that gives you much more flexibility in your route to market.
Because I just before we came on air, Jeff, we were talking about this, weren't we? We were talking about how important innovation will be to any expansion post-COVID, because it's although it's been incredibly disruptive and obviously problematic to many people, one has to remain positive, and it's creating some what we might call green space for growth, isn't it? Literally, not just, you know, metaphorically.
Yeah, I mean, 100%. I think if you look back at any period of huge market kind of dislocation and disruption in history, that's when the greatest opportunities arrive, and that pace of change is just accelerating. There's some amazing stats out there. I think you know, back in the 1920s or 1930s, the average age of a company on the S&P 500 was 67 years. The average age of a company on the S&P 500 now is 15 years. And they think that 75% of companies that will be on the S&P in 8 years' time, we've never heard of. And so, you know, so thinking about that innovation and to Jonathan's point, how do you do something better than competitors, to me is really where you need to focus. You know, how do you do that extra bit, that, you know, how do you provide that service to customers which is better than others do? It doesn't have to be completely innovative in terms of a completely green space idea, but it needs to be better than what exists. And yeah, I think it's a really exciting time. Obviously, it creates challenges as well, but I think there'll be lots of great businesses and great opportunities that come out of this current uncertainty.
And just to come back to Jonathan, sort of your vision post-COVID, what would you what do you see happening, Jonathan, in the next few years? We've talked about a fragmented base that you're trying to make more cohesive. Jeff's talked about, you know, opportunities for growth. What would you kind of sort of say you would look to happen in the next year or two, given what's just happened to us?
Well, I'm always nervous about getting my crystal ball out. I think that generally people in the midst of something over predict change, and usually you get mean reversion. And so in the past, anytime anybody starts talking about paradigm shifts, I usually switch off because they don't usually happen. So I think some of the things that are being forecast at the moment, like the doom mongers, are in my opinion unlikely to be correct. Keynes talked about the much ignored middle ground. there's a best outcome and a worst outcome. Some people are very stressed about the worst outcome. Some people are very optimistic about the good. The high probability on the bell curve is it will be in the middle ground. So I think there will be some changes to the world, but I don't think they will be as extreme in either direction as some are predicting. And then I think it probably comes down to your sector. I mean, having said all that, some sectors are having zero change. Some sectors are benefiting, some of the supermarkets. Some sectors, airlines, having a very tough time. And I think that it will take time for that to work through. I believe BA is forecasting 8 years to get back to passenger numbers that they had last year. So I think you have to very dispassionately turn off your confirmation bias and any other biases you might have, and look objectively at your business and try and say, okay, what are the most likely middle ground outcomes which are going to impact my business, and do I need to adapt on the back of that? And then I think, Jeff talked about agility. I think that COVID will create as many opportunities as it creates threats. And where are those opportunities? And I would argue that, that if you've got an economy which is growing at high single digits GDP per year, some of the Asia economies, I personally think that therefore they can absorb a bit of an impact from that, and those are probably still good growth markets. So I think again that this is a moment where I would be looking at international expansion. I would be looking at where can I diversify my exposure to markets which might be more affected by COVID. But I think the highest probability is in 2 years that this is a period which we look back on, and it caused some change and it impacted some businesses, but we will be fairly back to normal.
Yeah, there's an interesting mix, isn't there, between sort of going global but local color. How different regions have a different skew, but within a global marketplace. There's a lot to play for, but I think one of the key things for me is positivism, and both of you guys have just been, I think, positive in what Jonathan would call an incremental way. You talk also about an incremental movement for success, don't you, Jonathan? It's that combination.
Yeah, I think you have to be a bit of an optimist to run a business, because you have to believe you can do it, and you've got to have resilience, and resilience you're going to get from believing that it's going to get better. So obviously you have to be careful not to be wildly optimistic, because you then lose people because they don't believe in it. I think you have to try and impress a positive picture in people to inspire them to see the opportunity and to come with you on that. But yeah, as I said, it's you hear about businesses that have stratospheric growth. Most businesses don't do that. Again, most good businesses are trying to grow at a measured but positive pace, and that's about incremental improvements to what you're doing, adding new markets, improving your product or your processes or your people or whatever it is you're trying to do. And so I think having a very kind of strategic, considered plan that you are implementing with your team on a regular basis is the way for most businesses to do that.
Fantastic. Listen, I'm going to bring in some of the guys in your supply chain. I've got a couple of WorldFirst partners organizations who work with you guys, and I'd like to, if I can, just bring a couple of minutes to the call. We've got, I can see we've got David Pasley Smith on the line from GFS. David, are you there?
Hi, Mark. Sorry, I just had to unmute myself. Common issue I've seen on this new COVID web conferencing. Yes, I've got a question really for Jonathan and Jeff. As Mark said, my name's David Pasley Smith. I'm from GFS. We're one of the largest providers of global e-commerce delivery and return services. In your experience of working with e-commerce businesses, what do you see as the main obstacles they face when trying to expand internationally?
I'm happy to go at that one. So we interestingly did some research into this a few years ago, and we asked businesses that. So, and it was some of the things I touched on there. So sometimes it's fear, sometimes it's localization, sometimes it was language, sometimes it was logistics. And actually I discovered at that point from talking to customers that people over worried about the risks. So we talked to some customers that had that were saying, oh, the fraud rate on international e-commerce is going to be too high. So then we said, well, what is the fraud rate? And I forget what it was, but I think it was something like 1.9%. And what's your margin? 20%. Okay, so you can absorb that. So actually, that shouldn't be that should be a reason why you put some anti-fraud measures in, but it shouldn't be an impediment to moving forward. So I think, and I think you can. We talked at one point about trying to do exporting in a box. Like try to say to people, okay, here's how you're going to do your finances, because people worry about that. Here's how you're going to do language, and there's lots, and that's got much easier with things like Google Translate and online fast delivery translation, and then understanding duty or things like that. There's websites that will help you do that. So I think that you can probably identify that the moving parts of your business which are impacted by in different markets, and actually I think online you can probably quite quickly get to solutions for those, and logistics is a key one. If you know, okay, well, I can get the money from abroad, I can ship my product, and I can get it back in some sort of cost-effective way. I understand how to market it there. I understand what I need to do in terms of meeting any local regulations. Then hopefully, again, you've ticked off all the things which might have stopped you, and you're ready to go.
Okay. Yeah. Thank you.
Yeah.
I mean, I think.
Anything from your side?
Yeah, I think Jonathan touched on some of them. I think in my perspective, it's those kind of three key parts of the chain, which is kind of it all can boil down to, which is how do you connect the buyer and the seller. So as a seller, how do you find that buyer, and obviously that depends on what your product is and where you're trying to sell it to. But there has been a significant improvement in that through if it's B2C through marketplaces like Amazon, if it's B2B through things like through Alibaba, etc. Logistics again, I think is a key point, but I think for those starting, there are things now like fulfillment by Amazon and some other kind of out of the box services, and as you progress and become more sophisticated, you can start to look at doing that yourself, because obviously the trade-off for doing that out of the box solution is that it's expensive, and so as you become more familiar with that market, you understand it more, then you might want to build your own website or sell direct to consumers, etc., because it's because you can keep some of the margin. And obviously the payment side is one of those key components as well. And I think the other key bit, I think, which we see is it's not necessarily the barrier, but I think it's one of the things that stops them being as successful as they could be, is that localization, that product market fit. And one of the, Jonathan said, one of the things that we failed at as a business ourselves when we went into China, we took a Western product and sold it to the Chinese. It was pretty successful to start off with because there wasn't anyone else selling that product to the Chinese, so they didn't have a choice. But then, quite quickly people saw what the opportunity was, and they started to create a much more localized product, and that impacted us, quite significantly, in terms of that, that extra competition. And actually, one of the great things for WorldFirst now and being part of Ant Group is that they are very localized from a Chinese perspective, and we are seeing huge benefits of not huge changes, but little things around how we communicate to the client, how whether it's via WeChat or rather than email, or whether the language is slightly different, or the order of our the way that we present screens, or the ordering decision is very different. The website design on a Western website versus a Chinese website is completely different. So that localization to me is really one of the key
so it's
things.
the same core product, but it's localized. That's the interpretation.
Yeah, exactly, 100%.
Thank you, Jeff. Thank you, Jonathan. I've got another question. Thank you for that, David. I've got a gentleman called Colin Stansbury who works for Avalara, and he's I'm going to introduce him saying, "The tax man cometh." Colin, are you there? Yeah, I know you've got a question for Jeff and for Jonathan.
Yes, I do. Thank you. The taxman cometh and the taxman taketh away. We're seeing a number of businesses that are struggling when it comes to cross-border VAT and sales tax, especially with the fluidity of legislation changes that are occurring all over the world. So with that in mind, I wanted to get your opinion, gentlemen, on what do you think will provide the biggest hurdle to internationalization? Do we think it's going to be COVID-19 and the effects on the actual trust of the markets, or do we believe that Brexit will have a bigger impact upon trade internationally?
I'm happy to give my view on that. So I think that I'm not too worried about Brexit. I think that it will, again, I think it's partly sector specific. I think there's some people that this is going to be harder. They're maybe it's going to be more expensive. At the same time, I think it will open up some other new markets, some of which, if you look at their growth trajectory, is higher than the kind of forecasts for Europe. But I think understanding taxation is one of these ones which is quite tricky. There's some things I normally say to businesses, oh, you should just do that yourself. It's not very difficult. And there's others which I think you want to get some expert help on. And tax, one of the things that we learned in the first couple of years was, and it was my co-founder's father, who was the senior partner at Norton Rose, said, there's nothing as expensive as cheap advice. Because if you get it wrong, it's can be very expensive. So I think it's worth making sure you kind of get that right. I think in terms of sort of COVID impact, again, I think some of the people that are forecasting fundamental shifts, I don't think that'll happen because there's an even more fundamental cost differential. For example, like you cannot pay someone in the UK to make certain products on a basis which competes with what it would cost to make it in Cambodia and ship it here. So, and we don't have some of the technology to do that. So this idea that we might start making our own mobile phones in the UK and USB drives and mobile phone cases and things like that, I just don't see that happening. And I don't think the consumer is willing, I don't think the consumer really cares that much about that, where that's made. And there's no longer that perception that, well, it was made in Asia, so it's no good, it's poor quality. I think that, so I personally think that there are fundamental business benefits to having regionalization of production. It makes sense if you have large cotton production in Turkey to make it in Turkey and to ship it somewhere else. It doesn't make sense to have it in 20 different countries, particularly if you don't have the right soil or climate. So I think fundamentally it makes sense to have regionalization of supply. I think that there are a few areas. I think some countries will say we can't rely on international source of vaccine. We need to make some of that locally. I think we need some food supplies need to come locally. That's maybe one of the things that some countries have learned. But I don't believe that globalization is going to go into reverse, even in light of some of the geopolitical things going on in the world.
Yeah, I mean, I think fundamentally from my side, I think globalization is stronger than kind of the nationalism that's happening at the moment. And I think while there may be some people that want to diversify that supply chain, they may look at Southeast Asia as well as China, so they're not kind of dependent on one particular market. I think they still need to go international. I also think that the shift that we're seeing, from COVID, and I'm probably a bit different to Jonathan. I actually think we have seen a paradigm shift, in his words, that has accelerated the movement to digitalization and online by kind of 5 or 10 years. And I don't think that's moving back. So, my parents are in their 70s are now buying things online that they were never buying online before. And I think once they've got used to it, they will continue. So again, that growth to online and that demand for international products, I think it has accelerated permanently. I think the taxing's a really interesting piece, and I don't think it's related to COVID or Brexit, but I think what we've seen in our industry, and I guess we're more exposed than most, is that there's been an unequal playing field historically around taxation. So if you're selling in Europe, in the UK, on Amazon, etc., you're much more likely to be strictly followed for tax, etc. Whereas historically, some other markets probably aren't being policed as strongly. But there is now increasing regulation being put onto the marketplaces and themselves to actually reinforce the application of the right tax rules. So actually, some of the the labour arbitrage, I think, is there for the long term, but some of the tax arbitrage, which really shouldn't be there, I think is being narrowed. So it's enabling it to be a more competitive playing field for SMEs in the UK trying to compete with some of those other pieces. I'm like Jonathan, I'm fairly bullish on Brexit. I don't think that's going to have too much of an impact in the long term. I think we'll work things out. It's too important to not work to work those things out. So I don't know if that answers some of the questions.
Well, gentlemen, what I can say is it's beautiful being on this webinar and hearing some positivity out there at the moment, especially when it comes to international sales. So, and that doesn't sound like bluster. So thank you, gentlemen, for your opinions.
Thank you, Colin. Always good to get your views as well. I've got a few more questions here before we close the session. Got one coming from Nick Mahindra from Auralift, and Nick's keen to get some funding together to grow his company both in the US and globally. And he just wants to ask both Jeff and Jonathan, what's the best way to attract investors? guys, any tips for Nick?
Well, my view would be you have to put yourself in the mind of the investor and what do they want. And most investors, particularly the professional investors, ultimately are looking for a return on their capital. So sometimes people come to me for investment on an idea which might make some money along the way, but it's very difficult for me to see how they're going to repay the core capital. I can see how they can incrementally make some money. So you have to have a view, and you should have a clear path for how you're going to repay that money at a higher rate than you could get in a lower risk investment, because all investment is ultimately about risk reward. So I think, and it needs to look sufficiently appealing and be evidenced as to why that's believable, that it's worth it. But if it looks the hockey stick's too steep, I switch off because I think, oh, this is completely unrealistic. So I think, and then think about if you were going to invest in something, you'd be looking for a good idea, good team, good leader, the big market. So what's the market opportunity? How are you going to get some of that market opportunity? How are you going to do it better? What's your secret sauce or USP that's going to enable you to do that? And then I think you need to cast your net a bit wide. You need to think about who might be. Are you looking at angel investment, maybe larger numbers of smaller people? Are you going to one of the kind of aggregators of angel investment, like some of the fundraising sites, or are you talking about institutional money? If you're talking about institutional money, you probably want to go to a broker who can help you position yourself. And I think depending on how much you're looking for in the scale, and it can take 6 to 12 months to prepare your business for that, because they're going to want to do due diligence to verify that everything stacks up. And have you got risk matrices? Are you taking minutes at board meetings? Can you evidence what you've done? Have you got rock solid numbers and good analysis in those numbers? So thinking about how you're going to present your best foot so that they believe that they're going to get their money back with a good return that justifies the risk of investing in a smaller business.
Sageful words. Thank you, Jonathan. Have you got anything to add to that, Jeff?
Yeah, I mean, the only couple of things, I think, and again, it depends on your network, the size of the business, etc. I think increasingly now, because it's more common that people are trying to look for investment, etc. I think most cities have pretty good kind of startup incubator type setups that you can go and provide good networks. So if you don't have a network yourself, kind of get you involved in one of those networks and find out who's involved there that will be able to either have a network themselves or help you. And I think the other piece that Jonathan mentioned, I think that advisory kind of support of someone who's done this for a living and is helping you assess your business end to end and really position yourself in terms of what is your competitive advantage, where do you fit in the market is super important, because there's lots of great ideas out there, and if you can't sell it, then it's difficult to raise money.
That's great stuff. And to just the link into that is our last webinar in this WorldFirst series is actually about funding US and international expansion. And we've got some interesting experts in 2 weeks' time looking at this both from the UK and the US. So we'll be sending out some notes and some registration forms on that early next week. But for now, thank you very much to both Jonathan and Jeff for your wise words and for your optimism, and for the phrase that comes out a lot from what I've just been hearing is that sort of incremental piece, just doing a little bit more in every different way is as a good way to grow. So thank you both. Thank you to WorldFirst for your kind support in putting these webinars on. We have a lot of text questions that we haven't been able to answer on webinar because we're out of time, but we have captured all of those, and the team from WorldFirst will get back to you all and connect to you and get those questions answered as promptly and as quickly as possible. And in the meantime, we thank you for watching. And as you always have to say at the end of these events, stay safe. And until next time, goodbye.